In this video, I want to share with you 3 ways for you to improve your credit score. As property investors, it's really important for us to have a really good credit score, because ultimately when we're working with lenders will be looking at credit scoring systems to see what the credit rating is before they decide how much they want to lend you and what rate they're going to lend money to you at. So in this video, as I said, I want to give you 3 tips that really helps you improve your credit score wherever it is right now, whether it's kind of right down there, you're just getting started, or whether you've got a fantastic score anyway and you want to maintain that. So first of all, what is credit scoring? Let me just explain that first of all. So credit scoring is a method used. There are 3 external companies, which I'll talk about in a moment, that keep this data on our individual financial transactions that we make, money that we borrow, when we're repaying it, how often we're repaying it, credit arrangements that we have, whether that's a mobile phone, a catalogue, a mortgage, an overdraft, whatever it might be, the arrangements we have around that, how much debt there is, how frequent we make the payments, whether we make those payments on time or whether they're late or whether we have any penalties. They collate all this data. So let's say you decide to go and get a brand new phone and you go and get a credit check done, or whether you go and purchase a car and they do a credit check on you for the car finance. What they're doing when we talk about this credit checking, they're going to one of these 3 companies and asking for them to give a decision on your credit worthiness, how comfortable they should be in terms of lending you finance for you to be able to make the purchase, have the phone contract that you're essentially looking for. So when they go to these 3 companies, they have different mechanisms they use in terms of how they score their data. So sometimes people will talk about a credit score that's 700, 800, 999. The reality is these figures don't mean a great deal when they're out of context, because they're related to the individual agencies and how they decide their credit scoring mechanisms work. So let's talk about what these 3 companies are. So the one company, not in particular order, is Equifax. Equifax is the one company that a lot of companies will use, they'll go to for their credit checking. Experian is the other one. So it's I was going to say second, but they're in no particular order. They're the 2 big ones anyway. Equifax and Experian are ones that are used by most of the companies in the UK when they go and do credit checks. There's also a third company that was called Call Credit. I say it was called, but I believe recently it's taken over by another company called Credit Karma. They've now taken over that third agency. They're the 3 main agencies that hold this data that's shared when you go and apply for any kind of credit. So on the small terms and conditions, when it said they're going to go do a credit check on you, ultimately what it means, they're going to go and ask these companies, what's this person's credit worthiness like? So when we talk about these 3 companies, the importance of maintaining your records is because if information is incorrect when you're using these companies, it's going to cause a problem for you and your credit worthiness. Often people find out there's a problem on their credit file, or there's an issue or some incorrect data, or a payment's been recorded as missed or late, is when they go and apply for credit and it gets turned down. It's one of those, the computer says no. When you get that kind of response, people panic and think, well, why have I been refused credit? They go off and try and find out what's going on. So really in this video, I want to help you with 3 tips to really understand what things you can do to ensure that your credit file is in order and improve your credit score. So let's get straight into it. The first one is to get the data so you can actually see and review that it's correct. The data these 3 companies hold on you is to request that information to have a look. Now, when you go to these 3 companies, they'll sell you paid data services where you can subscribe to them. They'll give you the information on your credit file. Bear in mind, other people can't just go and look at your credit file. People can't just nose through your credit file to get this information. You have to give permission for it to be available to other people. The same way you can go and get your own data. So you want to contact all 3 of these companies and get the information from them. Whether you use their paid service or you use a free trial and then cancel that once you've got the basic information, you stay on a subscription service with them, or you just ask for the data under the data protection rules, which is just a copy of your data, and they'll charge you a nominal fee for that. It used to be £2 or £3, I can't remember what it is right now. Either way, whichever method you use, it doesn't really matter. You just want the information. So you get the information from the 3 companies, you pull that together, and then you have a look through each one of those to make sure all the information is correct. So what is it you're looking for? Well, the key things you're looking for is you are recorded at the correct addresses at the right time. So the address information is correct. Bank accounts or other credit accounts you might have had, credit cards, loans, overdrafts, mortgages, whatever they might be, make sure the information is correct. Who the lender is, the amount of money, payments that were made, were they made on time, is the account now being closed, all that information you want to see. Sometimes people will talk about they've got a CCJ or a default on their account. This is where there's been a dispute over a credit arrangement, or money has been owed that hasn't been paid, and then it's gone to court and a judgment has been made. That information is recorded on the credit file. Also things like voluntary arrangements, IVAs, bankruptcies, all this information is recorded on the credit file. This data stays visible for 6 years. Now, what it actually means is you can go back more than 6 years to see the history. But when lenders, people that are going to lend money to you or provide you credit, they do these checks, they only go back 6 years. So if you've got a CCJ that was, say, 7 years ago, that won't show up on your credit file right now when you do a credit check. People talk about things dropping off after 6 years. Essentially, it means that 6-year window they use to do the credit file, that's what they're looking for. So make sure you register the correct address, make sure all your accounts are correct, the amounts, the suppliers, when you started those accounts, if you've closed those accounts, making sure that's closed correctly, and financial associations. So what I mean by financial associations often might be, say, your spouse or somebody that you have, like, for example, a joint bank account with. When you have a joint account with somebody or joint financial association with somebody, what's happening is that the two files get linked together, that these people are financially connected. Now, if somebody has a negative situation or impact in their life here, it could affect the other person over here because the two are linked. So unless you absolutely need to have those financial associations, for example, you've got a joint mortgage with your spouse. So if you haven't got no joint credit as such, my personal suggestion would be not to have any financial associations, to keep credit separate so it doesn't have an impact on anybody else. So the first and foremost thing is to get that information on your credit files, to check and make sure it's correct. The second thing is much easier. It's really simple. It's a small thing, but it's very, very important. And that's to make sure that you are recorded on the voters roll, that you register to vote, particularly if you're eligible to vote, right? Now, you might choose not to vote. You may never have voted. You may vote occasionally, but that's not the point. The point is you need to be recorded on that system, because the credit companies and lenders use that as a reference point that your address matches where you're supposed to be, because it's a legal requirement that you should be registered. So it's important that this information is recorded, that you are registered to vote, because if you're not on the voters roll, it won't show up and that'll be a problem. So the third thing that we want to look at is the level of credit that you have, and ensure that you have active credit. In the past, for example, I've had conversations with people say, look, I've got no borrowings, I don't owe anybody any money, I've got no credit whatsoever that I owe, so I've got perfect credit score. The reality is that's not what it's recording. If you've got no active credit, it could result in a very low credit score. That sounds bizarre. Why would somebody have a low credit score if they've not actually got any borrowing? This is the challenge. What the lenders are doing are looking for your ability to borrow money and repay it on time. So really what they're doing, they're looking for that record of you being able to borrow and repay. So are you paying your mobile phone bill on time? Is your overdraft within the fixed arrangement? Are you paying your car finance every time without any late payments? This is what they're looking for, your ability to be able to manage and repay money. Now, if you don't have any active credit, my suggestion will be to get some credit. Or if you've got a low credit score, my suggestion would be to get some active credit. So how do you do that? Well, really it's about applying for credit cards that you'll be eligible for. There's different types of cards. You may not be eligible for all. There's some for people with low credit scores. There's some people for very good credit scores. Ultimately, what you want to do, you want to get access to that credit so that you can use some of that, whether you're paying for your fuel, your grocery. I'm not talking about going on a spending spree on this new access to credit. I'm talking about just using credit within your means that you'd repay every month anyway. So for instance, if you're going to do your grocery shopping, you're going to get fuel for the cars, etc. Rather than pay for these things in cash, or on your debit card, pay for them on your credit card. When the bill comes at the end of the month, repay it in full, so you've got no rolling credit. What that does, it demonstrates your ability to manage debt, to borrow and repay. So when lenders are looking to lend you money, they will look at your credit score, and the higher your credit score is, the more better position you'll be in to attract the lower rates of borrowing, and also make sure you get approved for those rates. So I hope you find this video really useful and helpful. Let me know your thoughts, put the comments and questions below. I'll be happy to answer those.